Right now, the average S&P price target to end next year is 48.81, just a couple of percentage points above where we are right now. So it kind of begs the question, what will happen next year? Could Wall Street get it wrong again? Joining us now, Piper Sandler's Managing Director and Chief Market Technician Craig Johnson and Chief Strategist at 248 Ventures, Lindsay Bell. Welcome to both of you. It's Friday before New Year's. God bless you both for going on TV. Craig, I want to start with you because you're one of the ones who made some great calls, not just this year, but over the years. In fact, if our viewers remember, back in late October on this very show, here's what you said would happen in the final 2+ months of the year.
Brian, it's about 14% upside. Once we get some clarity brought into what's going to happen in Washington, get through the earnings season, these kind of things, I think there's a real meaningful pop. Again, we're sticking with our 48-25 year-end objective, Brian.
So, Craig, basically you nailed it. When you said that, the S&P 500 rose about 13%. You were calling for about 15%. Not going to dither. We're happy either way. So what are you seeing now momentum-wise, technically, for next year?
So, Brian, for next year, I just have to call out that we think is going to be a very different setup than what we had in 2023. We talked about a hop, a drop, and a pop for 2023. We think next year, Brian, will be an HLTR or a high-level trading range. We think we're going to have a strong Q1, sort of consolidate in Q2, Q3, and then have a strong push after the election in Q4, leaving us at a year-end objective about 50-50 for next year. So we're seeing about 9 to 10% upside from here.
What's interesting about that, Lindsay, what Craig is just saying, and I'm not going to whatever because you guys are a lot smarter than me, but I've got my final prediction of the year coming up. One of them has to do with the fact that I just wonder if the market may stall out, Lindsay, from April or May on, because people like in 2016, investors might just sit back and see what happens with the election. Basically, nice momentum to start the year coming off of now. And then just kind of like, you know what? We have no idea what's going to happen with the election. Let's just chill. What do you think?
Yeah, I mean, historically speaking, that's certainly what can happen. Investors kind of in a wait and see mode during that summer period. Then after the election happens, you can see a big pop because there's more clarity. We all know the market likes to see clarity. So you get that clarity into the end of the year. You get the Santa Claus rally and we're off to the races. But when I think about 2024, I really see it as this return to normal. Earnings growth is going to be in the 10 to 12% range and sales growth about 5%. Those are near historical averages. And then when I think about interest rates that have come down, let's call it into the 3 to 4% range with the Fed cutting because they can, not because they have to, and we're in an economic crisis period. I think that you can get an 8 to 10% pop in the market in that type of environment as well, too. So I'm optimistic into next year. It doesn't mean it's going to be a straight line up, though.
Yeah, and I don't want to misquote you, Craig. Did I get it right? I mean, effectively, are you suggesting that we carry this momentum over, and then I think that people just say, I think it was 2016, the market did nothing for months leading up to the election.
Correct. That's exactly what we think is going to happen, Brian. But we got to put a little bit of a twist to it for the viewers here. This HLTR means that these MAG 7 stocks become the lag 7 stocks, Brian, and we start to see the small mid-cap stocks really start to play catch up.
Did you read my prediction? I haven't even posted my prediction, Craig. You got it. I'm giving you a hint, I swear I'm not stealing your stuff. Why do you say that?
Well, I say that because I just look at the charts. When I go back and I look at these MAG 7 stocks, they're all just starting to consolidate sideways. And if you look coming off of the lows of October, you can start to see that these MAG 7 stocks have been underperforming the S&P 400, the 600, and even the 500. And therefore, I think this big differential between the MAG 7 and these smaller cap names, they're going to close this year. And these small cap stocks and growth stocks are really going to do well. And that's where I think you're going to get your best outperformance next year.
I love it. You might have coined it the lag 7. Lindsay Bell, do you think the MAG 7 will turn into the lag 7?
I mean, I love the terminology. Kudos to you, Craig, for coming up with that. I tend to agree that I do think the MAG 7 could lag, but that doesn't mean they're going to fall off a cliff. This isn't a zero-sum game here. There's still 40% of the S&P 500 index, so we need them to perform pretty well. And I think they can. If you look at the those 7 stocks in particular, you're looking at about 25% earnings growth, 19% sales growth, and the multiples on most of them are still below their 5-year averages. You're going to have Dan Ives on later. I'm sure he can speak much more concisely to it, but I do think that they can do well in the year ahead. And for those that are a little bit worried after having such a great year, if you want to get somewhat defensive, that's one area that you can dive into or nibble into as they underperform the rest of the market.